part of the white paper, what it says is that you're a rational, you're economically rational, incentivized player. So you have your skin in the game in terms of Bitcoin investment. So that means you're not incentivized to eventually kill Bitcoin because you will lose your investment.
Right.
So I'm assuming not too many parties are actively searching how to break or kill Bitcoin because they would kill their ultimate investment.
Yes. Yeah, this is...
Or their source of living.
Right.
Hey everybody, welcome to the What is Money Show. I am thrilled to have you here joining me on my mission to help shine light on the corruption of money. Now, if this is your first time listening to the What is Money Show, I strongly recommend that you go back to episodes 1 through 9 first, which lays a lot of the groundwork for many of the concepts that we explore on the show. These first 9 episodes are my series with Michael Saylor, and thousands of people have told me that this is the best podcast series they've ever heard, hands down, and that it was instrumental to their understanding of money and Bitcoin. So if you're looking to start a deep dive into the nature of money, I don't think there's any place better that you can start other than episode 1 of this show. Now, a little bit about this show and how it makes money. The What is Money Show is 100% sponsor based. So all of our revenues are derived from direct sponsorships. And I strive to be very selective about the sponsors that I work with, specifically only using sponsors that I use personally, and also choosing sponsors that have values which are well aligned to the values expressed on this show, such as freedom, education, self-sovereignty, etc. So what I'm going to do now is a few ad reads right at the top of the show, and then I'll do a few more ad reads in the middle. And I hope you'll take the time to listen to them, as again, these are hand-selected sponsors, and I think you'll like what they have to offer.
Today's podcast is brought to you by In Wolf's Clothing. Wolf is the first startup accelerator dedicated exclusively to the Bitcoin Lightning Network. 4 times per year, Wolf brings teams from around the world to New York City to work with like-minded entrepreneurs, pushing the boundaries of what's possible with Bitcoin and Lightning. The program is designed to help early-stage companies achieve product market fit, develop their brand, secure early-stage funding, and grow businesses that help fuel the global adoption of Bitcoin. So go to wolfnyc.com to learn more about the program or apply. Again, that's wolfnyc, WOLFNYC.com.
Jan Čapek, welcome to the What is Money Show.
Thanks for having me here.
Glad to have you here. We are sitting in Prague for Bitcoin Prague 2023, and you are the first interview of a lot of interviews here for us.
It's an honor.
Yeah, it's great to have you here. So maybe we could start with a little bit just about you, who you are, and your path into Bitcoin.
All right.
Clearly, here on your shirt, you're with Braiins. What do you guys do in Braiins, and how did you come into the space?
So my Bitcoin journey started back in 2013, where we basically took over the slush pool and turned it into a professional project. At that time, Braiins, our full name of the company's Braiins Systems, already existed. And we were originally a company doing like embedded firmware for like ECUs and mostly like this area. But when Bitcoin caught my attention, we were thinking this is a good point to pivot the purpose of the company, and we really started like developing like the pool software, building support team. It's important to realize like now everybody thinks like the Bitcoin industry for granted, like everything is sort of on the professional level. But at that time, typically a lot of projects and pools were just run by like single person, 2 people, no professional support, no documentation, like no high availability, and all these things we have developed throughout the years. Then we were thinking like what would be the next logical extension of our product line. So we came up with the idea of the Braiins OS firmware. In fact, the story is a little bit more complicated because we effectively had originally a deal with a Chinese manufacturer that we would provide them a firmware in exchange for some royalties, but that deal sort of fell through, and we were sort of like left with this all work invested into developing the firmware. And we were like, okay, we're going to do with it. and we ported it to Antminers S9s because these were the most popular devices at that time, and then turned it into what we call now Braiins OS. Later, we came with a commercial version called Braiins OS Plus that had some special features to find optimum settings for the mining machines. And now in 2023, here we are. We are right now like 85 people company, headquartered in Prague. We have our BD teams around the globe. The data centers for the pool mining endpoints are also around the globe. And we try to be basically globally present company. So even though we're based in Europe, that is not like the biggest place for mining. I think we supply quite a few customers, especially in the US. Nice. So that's a very short version of the full company history and my journey into Bitcoin.
I think you were saying yesterday, because we did like a city tour and a little presentation yesterday, roughly 10 or 15% of hash power coming out of Europe and maybe double that coming out of the US.
The US is like 34, 35 already. And that's actually an old number from Cambridge Research. Mm-hmm. And what caught my attention was Europe, but don't think of this as Europe, the Central Europe, but it's probably mostly the northern states where there is cheap geo electricity. Mm-hmm. Or hydro, like Norway, Sweden.
Gotcha.
There's like this island.
Gotcha. And then you said you guys are focused on like the enterprise clients mostly, trying to deliver them.
We try to do like a mix of both because the pool has originally been like the first Bitcoin mining pool, and there is a lot of like hardcore Bitcoiners still mining with us just because you're the first apolitical pool, and we try to keep this narrative also throughout our other products, which in the form of the firmware. So we try to support the retail users, but at the same time we are tweaking the features of the firmware also for the enterprise, mostly in the area of like grid balancing and things like this. There's no support in Bitcoin mining machines that come with the stock firmware for features like this, for like fast curtailment and then bringing the machines back up in a couple of seconds.
Right. Which is one of the big advantages of energy producers using Bitcoin, right? They get that interruptible load or dynamic demand.
And typically this is the deal that the big farms get with the energy providers, that in exchange for a very favorable rate, they're able to sell the opportunity of not actually mining.
Right. To be like the energy buyer of last resort, like we often talk about Bitcoin, right? All right, cool. So we've done a little bit of Bitcoin mining content on this show, but it's been very kind of 101. We actually just released an episode a few days ago, Bitcoin mining 101. So you'll have to be slow with us here. We're trying to just kind of introduce this concept in an intuitive way. But I thought today, as we discussed yesterday, we could talk a little bit about the game theory of Bitcoin mining. And one of the big areas that seems to be of concern is this idea that Bitcoin mining hardware, the production of that is still rather centralized. Perhaps that is like the weakest link in the chain of Bitcoin's decentralization even. How do we think about hardware production for Bitcoin mining from a game theoretic standpoint, and then where are we at today?
So maybe a little bit of the history before we dive into the present state. It's important to realize that originally majority of the hash rate was based in Asia, or even more specifically in China. Mm-hmm. So at that stage of Bitcoin mining, and Bitcoin mining should be considered as the ultimate tool to secure or to ensure security of Bitcoin. And it's not very, very well communicated in my view, because miners are like deeply into mining. They don't really care that much about the detailed Bitcoin features, and the users of Bitcoin are complaining about Blockspace, but they actually don't realize that the heart, that the ticking thing behind Bitcoin is the blockchain, but the blockchain makes only sense with this huge computing power securing it.
Right.
So originally there was the big centralization in China in terms of the physical concentration of the machines, and historically basically one company evolved into the leader in the industry, which at the same time we can say this is a great success, but at the same time it's a little bit of risk, because the company is Chinese based, and most of the companies trying to build a competing solution in the previous years typically failed. And there have been various reasons. Typically, the Bitcoin cycle has not been favorable for the development for them at that point. But there were also other, let's say, circumstances that probably could have been caused for this. One of them being, for example, the overt and covert ASICBoost affair, where the manufacturer in China or Bitmain, they had this feature implemented in the chips, but they were not really open about it. So apparently they must have been using it. And let's not take this as a complaint, but this goes back to the game theory. That if you have an edge compared to your competition, you're gonna use it. You're gonna take advantage of it. But at the same time, the competition sort of, if they don't catch up, if they don't find out like what the trick really is, then they're gonna lose the game.
Yeah.
And nowadays, we're in a situation where, okay, the hash rate is no longer centralized in China because of the ban, but we still have just a couple of manufacturers that could be called the industrial leaders in terms of manufacturing the hardware. And there are a few Western companies, including us, who are getting ready and trying to enter the market. But one thing is entering the market, and the other aspect is to get the cut in the market and succeed in the competition with the Chinese manufacturers. But I don't want to present this as like complaining or whining, but it's going back to the roots of Bitcoin. When you read the white paper, it's about the incentives. It's an incentive game. So we're strongly incentivized to enter this market because we as a company providing, as an example, company providing the mining tools going from pool through the firmware, it's a logical extension that we should be providing the full stack going up to the mining machines. And there are other players that have sort of similar thinking. Another aspect that comes into play with the large-scale Bitcoin mining is that the big farms, they typically don't want to pay the big margin and have the variance in price depending on the Bitcoin exchange rate, right? Because producing the mining hardware is pretty much fixed price. Let's say if we account some inflation and supply chain issues, it varies a little bit, but definitely not in such huge spikes where the machine can cost, I don't know, from $100 per terahash going down to like $15 per terahash. That doesn't reflect the true cost, where the 15 goes really down to basic manufacturing cost pretty much.
Interesting. But you mentioned Bitmain. They're like the elephant in the room. What percentage-wise, what percentage are they producing of Bitcoin mining equipment worldwide?
I would say majority, like 70 plus.
70%,
I would even dare to say something like this. Yeah. 70.
And so that's like a concentration risk in the marketplace, effectively, that it's all under one provider.
And then you can dig deeper and say like, okay, what are the features of the machines? And there's also a big shift in the industry, which actually goes in the negative way. But again, don't take this as a negative comment, because it's an incentive for us to provide, and it's an opportunity for us to provide an alternative. So back in the day with the Antminers S9s, which is probably like 2017, you had the full machine. When you bought it, you had full access to it. So that means you had full administrative privileges. You could, if you wanted, you could like wipe out the machine completely. Outside of this, there were like bits and pieces of source code. There was actually even a data sheet for the mining chip available for download. So you have quite, let's say, almost complete information. And if you were incentivized enough, like we were, you could actually write your own firmware completely from scratch, which is what we did. But nowadays, there was a big shift with the latest generation where the miners, by miners, I mean the users or the customers who buy the machines, no longer have full access to the machines. It's like you buy the machine, it has the web interface, you can log into it, you can change some settings, but it's not that you can like directly log into the machine through SSH and like do anything you want with it, including flashing another firmware, an alternative firmware. For that, they are presenting it as a security feature where in order to keep warranty and to prevent any issues with viruses or whatever, they will not let you boot another firmware using secure boot features, which is a hardware thing. It's a feature of the control board or the CPU that prevents you booting another operating system. This is a common practice by some vendors of desktop computers where you can actually enable this feature, and that means it will not allow booting something that is not signed by a key. And then, so the feature itself is very interesting, but the problem or what it lacks is actually the end user security. And what I mean by this is that you as a user have to trust that the manufacturer actually keeps the signing key in a very safe place. It is not going to leak, and you have to rely on this fact. It's not the opposite, that they will say, okay, here's the firmware, here is a user guide, or let's say a tool that will allow you to set or generate your own signing key, sign the firmware that you downloaded from us, and that means that anything entering your farm cannot infiltrate your machines should you have some network glitch issue, security problem. Then it would be a very nice user feature or security feature that could actually boost, let's say, adoption or whatever. But this is presented in exactly opposite way, saying, no, you're not even allowed to select this signing or encryption key. It's like, we burned it into the CPU for you. You cannot change it anymore because it's one-time programmable, and you have to stick with our firmware. And then us as like alternative firmware vendors, or one of the vendors, we have to find ways how to boot an alternative firmware, which costs us money and time and makes it uncomfortable for the user to switch. Obviously, we provide tooling that makes it quite easy and almost transparent for the users, but we have to spend additional resources on developing this. But then the outcome is that even though you tried to secure the machine, there are still ways how to boot the alternative firmware. It's just more difficult. And the outcome is that you don't have anything more secure. So the only scenario that's actually not covered is that what if there could be some potential software flaw, software bug, not even intentional, and this could cause some disaster because you have basically one manufacturer with the majority of the machines. And if, let's say, still the majority of the machines are running on the stock firmware, then bad things could happen theoretically. And then we can still go back to the theory. So like intentional attack in this era in terms of like something coming directly from the manufacturer is probably not a high probability because the manufacturer themselves, they have big stake in Bitcoin, right? So they are not incentivized to break it eventually. But I mean, it's still a company somewhere in China. You don't know what's going to happen if the government steps in, if they find it important enough. But they found it important enough to ban Bitcoin mining because of the energy issues there. So it's very interesting.
Yeah. So there's a weird, I guess, a competition of incentives, as we've described, like an incentive game. Bitmain has somewhat of an incentive to get you onto their proprietary firmware that you're not compiling yourself. So in a way, you're trusting Bitmain more and more and verifying less and less, right? So sort of moving away from the core ethos of Bitcoin. Don't trust, verify. And then there's a counter movement to that, which is what you guys are doing, right? You're letting customers, I guess, actually build their firmware from scratch, so to speak. So you don't need to trust Bitmain, you can actually verify.
We provide the alternative. There's one aspect that I need to clarify. Back in the day, we were a little bit naive guys trying to find the right business model. So we were like, when we developed the S9 support, we did it like fully open source and everything. But with the upcoming generation, we have to develop the firmware, let's say, based on like full analysis. We analyze things and look at it, how it works. And then based on that, we write it. So essentially, the software that we have is a living data sheet for the machines, which on its own would be nice to publish in full detail. But in that case, we would be like cutting off our business because there is actually competition. It's not just us, there's more vendors. So none of these vendors actually do this. But what we try to provide are the individual pieces that would be published, and eventually you can basically build the full system from it. So, and majority of the risks actually don't come from that tiny Bitcoin mining software piece, but it's like from the full operating system, because typically there are some management tools in there and things like this. And this could be the source of the security holes. Gotcha. And it's even worse, like when you kind of like physically log in into the system of the machine to even look around to understand what's happening. And there was a bonus feature from Bitmain. It was advertised that it was meant for management, but basically it was that Endbleed affair, but you were able to shut down the machines remotely, or the manufacturer would be able to do it. So, and then they eventually removed it because they say the feature is not needed anymore, but that was not a feature. It was like really a sort of a bug that was in there. And at that time, they were still publishing the sources, so you could see the commits on GitHub where they removed that.
Wow, interesting. Wow.
Now I'd like to tell you about our sponsor, the Gold Investment Letter. The Gold Investment Letter helps sophisticated investors navigate capital markets and maximize their profits in trading gold, silver, and mining stocks. The Gold Investment Letter seeks out the most undervalued companies and identifies special situations in the mining sector, and then provides in-depth analysis on both their financial positions and future prospects. The Gold Investment Letter explores many complex domains such as investor psychology, portfolio management, and macroeconomic trends, all with the goal of making you a better investor. The Gold Investment Letter offers a free version and a paid premium version, and I strongly recommend you at least sign up for the free version, because after having read a few of these issues, I can promise you it is a treasure trove of good information. You can sign up for the free newsletter today at goldinvestmentletter.com. Now I'd like to tell you about our sponsor, iCoin Technology. iCoin has just released a sleek new hardware wallet. Looks like a mini iPhone, a little touch screen and camera on it. The device has no Wi-Fi, no cellular connection, no GPS. It's a strictly physically cold hardware wallet. Like I said, it's got a high-res 3-inch touch screen. It's got a camera for air gapping the wallet. It's got optional Bluetooth compatibility. And it's really a brand new UI, UX experience for a hardware wallet, making it very accessible, easy to use, not intimidating. And as we always talk about on this show, the only way you can truly own your Bitcoin is by having it in self-custody. So you need a device like iCoin Wallet to truly own your Bitcoin. Go to iCointechnology.com today and use promo code Bitcoin23 for 30% off of this new sleek hardware wallet. Now I'd like to tell you about our sponsor, CrowdHealth. CrowdHealth is a Bitcoin-enabled alternative to legacy health insurance. Now let's face it, legacy health insurance is an absolute scam. Nobody can explain this better than the legendary comedian Chris Rock.
Insurance. You got to have some insurance. You got to. There's an insurance. They shouldn't even call it insurance. They should just call it in case shit. Like, I give a company some money in case shit happens. Now, if shit don't happen, shouldn't I get my money back?
So with CrowdHealth, instead of just paying premiums that you'll never see again, you can hold part of this pool of savings in dollars and in Bitcoin through CrowdHealth. And when you have a health event, you can draw against this pool of communal savings. So go to joincrowdhealth.com/breedlove to learn more or sign up.
And you mentioned this too, that there was an overclocking feature on these old Bitmain miners that they themselves perhaps were using when they were mining, but they weren't disclosing.
I think you're referring to ASICBoost, where maybe to explain a little bit from the background.
Let's explain what that is.
Okay, sure. So ASICBoost is as an approach to design the chip where you omit certain circuitry on the chip, which still makes the chip possible to work because some parts of the chip are basically sharing the same logic. And by this simple fact, you're saving up to 15 to 20% of electricity. So the moment you enable it on the machine, you literally see the wall power drop by 15-20%. You can compensate for this drop and you can overclock the machine. Obviously, it is not linear, so it's not like, okay, I'm now drawing 15% less energy, so I can overclock by 15% more with the same power consumption as it was before I turned on the feature. But It's somewhere in between, let's say. But this feature was not advertised by the manufacturer, and it was like secretly hidden somewhere in the firmware. And when we did the research, we actually published a research paper on like explaining that, or we confirmed that the ASICBoost is present on Antminers S9 and actually works in terms of like proving that physically it is doing something, but the firmware itself was not producing correct share. So whatever the machine was producing was garbage, but it was just a tiny tweak that was needed in there. And it took like a week, and Bitmain actually published a firmware that had this, let's say, glitch fixed, and it was possible to use the ASICBoost. But before this, you cannot use ASICBoost without adjustments in the mining protocol, because the advantage of ASICBoost has to be reflected in the protocol by the fact that you have to have some additional fields in Bitcoin block header that you're going to use to generate work for the chips. This is a little bit of a technical detail, but it's quite important that the present protocol, until we actually developed the extension, was not present. So that goes back to, 2018, 2017, when it was said that Bitmain and maybe some selected parties were able to use the ASICBoost feature by matter of what they called covered ASICBoost. For that, you didn't need support for the mining protocol. And in fact, I think they've been even using their own proprietary mining protocol in binary form. So after adjusting the mining protocol and us releasing the paper, they fixed the firmware. And then we were able to reflect this immediately in our firmware as well. And after that, like everybody says, oh, it's normal. Everybody's using ASICBoost. But if I was a customer who bought the machines before that and say, okay, so I've been wasting 15% of my energy on a big farm, that's a big bill, right? And there were no lawsuits. And the reason being, in my view, is that you have no other party where you can buy the hardware from.
Right.
So people were very careful about this.
It was a consequence of that centralization.
Yeah. And this was a good demonstration of what can happen. And sure, we can be sad about it, but I mean, if you're the manufacturer and you know that this feature is doing something useful, why are you not using it? So they used it for their own benefit. Sure. That's the incentive game. Right. You want to make more money than your competition.
Right. So by not disclosing the feature to their customer base, they were able to have this 15% leg up in mining efficiency.
That's what the story says. Basically.
Which is to increase their share of global hash rate, which is to increase their market share effectively.
And profit.
Kind of profit, but somewhat paradoxically, in this sense, at the expense of their customers. Because they're both mining and selling mining hardware. Yeah.
If I can run my machine that I produce by 15% more efficient, and I sell you the same machine at less efficiency, I'm still on the edge. And when I think the difficulty is high enough, I'm going to sell you the used machine, and still not telling you that the feature is in there.
Yeah, and apparently not taking that much risk in the process, because as you said, there were no lawsuits, there was no blowback.
Right. Which to me is surprising, but at the same time, it kind of makes sense because you have no other choice where you go to. It will be probably the last time that you buy the machines from the manufacturer.
Yeah, so if it were a more competitive marketplace and there were more vendors to choose from, presumably there'd be more risk for a Bitmain to do something like that.
Yeah.
Because if they undercut their customers, they send their customers elsewhere.
And by the way, at that time, there have been more Western players producing mining machines, and there's none of them out there anymore. So this could also be the side effect that they were actually successful in pushing out their competition out of the market, because this advantage is something that other parties didn't have.
Almost like a predatory pricing scheme, something like that.
But it's interesting that the concept has been invented by Sergio, the Sergio Damian, I forgot his full name, and Timo Hanke. So all these guys, like, it was like publicly known concept. So it's interesting that still the Western players didn't reflect it somehow. I mean, I haven't seen the internals of any of the competing chips at that time, but this could be one of the aspects that could have contributed to the other prospective businesses going out of business. And again, this is not a complaint. That's a matter of fact. It's a fair game. Yeah. And you're trying to do everything to outcompete your competition and get it out of business, right?
Yeah,
it's very normal.
Yeah.
That's business way of thinking.
Yeah, of course. Is this a form of market failure, perhaps? Because, I mean, this is just free market competition that resulted in this outcome. There seems to be a little element of deception here. I don't know if that quite fits the description of free market competition. And then the second part to that question is, what actually does fix this? Because I presume what we're saying is, well, you need more options for the customer. That would sort of resolve this problem.
Yeah.
But more options come through free market competition. So, like, is the solution free market competition, or is free market competition the creator of the problem, or is it both?
I would say it's the solution, and it's just a matter of time when, or it took time for companies to be in position to actually try to get into this game. Like for us, we have been a very small company at the very beginning. Nobody knew us. We didn't have the experience. So like even in 2013, when I saw the rise of ASIC-based machines, I was like, this is the thing that we have to do. But without any experience, without any background, without anything, it's sort of a gamble, right? So like for us, it's a very logical extension of the product line. And I think now we're like mature enough company to enter this market. And there are other players that are trying to do the same. Another aspect is that back in the day when the ASICs came into the game, they have been developed on some random process node, I don't know, 60 nanometers, whatever, but it was still quite far from the cutting edge technology. But now I think the ASICs have sort of like filled the gaps in the Moore's law, where nowadays the ASIC chips that are in the mining machines are using like 5, 4, eventually probably 3 nanometer technology, and these are the chips. This is the process node being used to produce the chip in your iPhone.
Okay.
So you're competing with giants like Apple or Samsung. Samsung is a foundry on their own, right? To have the availability of the technology. So essentially getting some wafers from the foundry. But before that, they even have to want to talk to you because you're some random crypto company, right? So you have to convince them. Whereas the competition, Bitmain, they already have their skin in the game for 10 years. So they know them. It's much easier for them to deal with this customer. So there are like obstacles that need to be jumped over, I would say, even jump over them to get in the game. Yeah. So it's not like you will design a PCB and have it manufactured and you have a miner. It's really about the ASIC chip. The rest is very important. So that's why we're doing the control board and the PSU and all these different components. But in the end, you need the chip. Otherwise, you will not be able to enter the market. Right. You are not able, the ASIC chip is not a commodity off the shelf component. You cannot buy it anywhere. If any of the manufacturers is willing to sell the chips, it's going to be at a price where it's going to be economically unfeasible for you to produce the machines and sell them with some reasonable margin to have sustainable business. So it's really about having the chip in the house. And I think this is where the industry is actually going, where the farms eventually will not want to pay the huge margin for one manufacturer, but they would want to create like joint ventures with different manufacturers and having like special deals, not dependent on the Bitcoin price. Yeah. Because publicly traded company, they're not happy with even with variance in lock in finding BTC.
Right. So there's a lot of advantages to being big and having buying power in this industry. Oh, yeah. And that seems to be keeping out a lot of the smaller players or preventing them from establishing a toehold in the market. Is that a trend that you think will continue, or do you expect to see some of these other entrants, like we've heard about Intel and Block recently, perhaps making forays into the space? Like, do you expect to see some of these other large players be able to establish a footprint, or will it be smaller players coming in, or a combination of both?
I think this is all going to be about various joint ventures. So small players, definitely not. The funding is very intensive. I mean, producing a mask nowadays is like probably like 15 to 20 million USD. It's just the mask to produce the actual chips.
The mask, what is this?
Mask is like a blueprint. It's really made from glass with different layers, and then you use the EUV or other sources of, I don't want to call it even light, because at these nanometers it's not even considered light, but it's like the blueprint that's maybe a good analogy is the way when you produce PCBs, you have some piece of mask that is being lit by light, and then it's a lithographic process.
Okay. So this is a template for basically producing the chip.
Yeah.
Okay.
And that is very, very, very expensive technology. So small players definitely not. What I think is also important to realize that it's not just about the chip. So it's the most crucial and core and important component, but you also need to have the experience how to design the rest, how to build it at scale with a certain quality and things like this. So there's a few players interested, like you already mentioned them, but as of now, there's no third party selling the machines. I'm a little bit putting Bitfury aside because there hasn't been heard from them lately too much. But there's basically 2 Chinese companies.
Wow.
2, 3.
So what are Intel and Block? What are they doing? Where are they at now? Because Intel was more of a story, it seems like about a year ago, that they were really coming into the space. And
what is publicly known is that Block has purchased the supplies of the chips that Intel has produced. So I'm assuming Block is going to come up with their hardware.
Okay. So what does that mean? Their own mining hardware?
It sounds like it.
To compete with Bitmain and such?
Yeah, or enter the market. Like competing means getting some cut in the market.
Yeah.
But I mean, I would probably resort to reading their public announcements about this. Changes occasionally. So this is what's coming, I think, now. And obviously we are also trying to enter the game, but it's quite difficult, I would say.
Yeah, right. For all the reasons you've outlined. Okay. So another risk, I guess, that comes with the centralization of this industry is the specter of hardware backdoors. And you mentioned, we talked earlier, like the increase in difficulty of flashing one's own firmware. That's sort of forcing you to trust these providers rather than verify for yourself. You also mentioned some restrictions that have been placed on full root access.
Yeah.
So that's inhibiting a customer's ability to do certain things.
To do anything with the machine. So if you decide to customize the machines, adding some additional software onto the machine, that's basically impossible. Let's say if you had your own monitoring solution that requires an agent to run on the machine, you can do it. You will not be able to upload any piece of binary code that you even develop yourself onto the machine without exploiting it and without like breaking in, which to a certain level is possible, but it's an extra obstacle and it's not a standard way. And what I'm a bit like wondering is that sometimes I think people confuse like safety with security, and Bitcoin mining machine is definitely not a safety critical thing. So unlike your car, where it would probably not be a good idea to flash the firmware for your brakes, with the mining machine, the worst thing that can happen is you're gonna like break it, like physically. It could burn out, or it's not gonna mine in the more positive scenario, and in the best case, it's gonna do something useful for you.
What is the difference between safety and security?
Well, safety is where you care about human being lives, right? Nobody is a threat. You're not gonna get hurt. You're not gonna get killed. That's where you speak about safety. And security, you don't want anybody to break into your machine without your permission, or breaking with permission is also kind of weird, but nobody can tamper with your machine. That's where the security concern comes in play. And that's where you want to make sure that at least the operating system that's running on the machines, putting aside the mining software driver for the machine cards, has to have some track record. It has to be auditable. It has to be up to date, and all these kind of things. Because otherwise, I mean, the security breaches are regularly published for the operating systems, for Linux, for Windows, for anything, and taking advantage of this in an embedded system like the mining machine is typically an easy thing. So that's the aspect that they are trying to hide behind, like security principles, not allowing you to fully work with the machine. Whereas I would expect another approach, sort of like what you have on cell phones these days. If you, not on iPhone, but on Android, if you buy an Android machine or cell phone from a manufacturer and you decide to run aftermarket firmware, you basically confirm this terms and condition in the bootloader of the cell phone, basically voiding your warranty, but still allowing you to do your thing if it's the thing that you want to do. So that would be also an acceptable approach. Because I mean, after 1 year, the machines are after warranty. So, okay, I have tested them. They seem to work fine with a stock firmware. I want to go higher. I want to go lower. I want to use them for grid balancing, whatever. And I want to have legitimate way, an easy way to install the firmware. Right. But there's no feature like this because there's nobody pushing them really. Because they cannot go, the customers cannot go somewhere else easily.
Yeah, it's such a game of options. It's interesting. So if we back up a little bit and we're talking about like game theory, just what it is, typically it's players are trying to maximize gain, minimize loss, and be unexploitable effectively. And it sounds like all of the centralization into a group like Bitmain, that they're actually maximizing their gain through things like the overclocking or ASICBoost scenario that you described. Yet they're exploiting their customers, and so almost like playing the game again. Is it because Bitmain is both a miner and a mining hardware provider that's creating these sort of game theoretic conundrums?
I think historically this has been the case. With the latest machines, it's probably important to say that the ASICBoost is a standard thing. So sure. In fact, the machines that are out there now in the market cannot run without ASICBoost. So you cannot run them in ASICBoost less mode or whatever. Right. It has been a new feature in S9, and I do understand the reason why you would want to have this feature switchable on and off, because there are certain risks associated with making a mistake while designing the chip. So that was understandable. But nowadays, everybody has access to this feature on the latest machines, and S9s are basically obsolete anyway. But that still does, if there were, let's say, no alternative firmware providers, that still means that the manufacturer can ultimately run, let's say, more optimized firmware on their machines than what they ship it to the customers. And when they sell the machines as used ones, eventually they will refresh it with whatever. Again, I'm just making this up in a way, right? I don't know what the real state of things is, sure. But this is a possible scenario.
Yeah,
but that's actually the point where we come in play, and that kind of fills in the gaps in the puzzle where we want to be part of the incentive game. We're incentivized to provide the firmware because we make money on the firmware. It's our source of revenue, and we want to provide the best firmware ever. So for us, actually, the situation with the manufacturer that they make things a little bit difficult and that they don't provide such a good firmware is actually good. So it's like both ways, right?
Right.
Imagine that they would be providing the best, most optimum firmware, whatever, with all the features, and they would be able to reflect any change request from a customer within a week.
Yeah.
That means there would be probably no space for their competition.
Right.
So in a certain way, it's actually good that there is space for additional business. And in my view, it's just the beginning of the new adventure, of the new era, where there will be more players actually entering the market with the full solution with the hardware. Right.
Now I'd like to tell you about our sponsor, Wasabi Wallet. With Wasabi Wallet, you can receive, send, and store Bitcoin privately. In Wasabi Wallet, your transaction history and wallet balance are completely hidden. Wasabi Wallet is easy to use, all of its privacy features are built in by default, and it works with any amount of Bitcoin. Wasabi users can make CoinJoin transactions together with BTC Pay server users or Trezor Suite users. For BTC Pay server users, they can make payments directly inside of a CoinJoin. And for Trezor Suite users, you can make CoinJoins directly on a hardware wallet. These features result in fee savings and security improvements for both sets of users. So go to wasabiwallet.io today to download the state-of-the-art Bitcoin privacy wallet.
Now I'd like to tell you about our sponsor, Casa. Casa makes it simple to buy and secure your Bitcoin without wondering whether you're doing it right. Specifically, Casa provides a multi-key custody solution, which is by far the most secure way to custody your Bitcoin. Now, when I talk about Bitcoin being theft-proof money or inviolable private property, a multi-key custody model is exactly what I am talking about. Using multiple keys lets you maintain full control of your Bitcoin while also giving you redundancy in case you lose one of the keys. It's also the best way to secure your Bitcoin for inheritance planning purposes. So go to keys.casa, that's C-A-S-A, today to sign up and use discount code BREEDLOVE.
So there's a dynamic going on here where the inferior firmware that Bitmain was installing that may have served its own company's interest, right, in terms of not unlocking certain features for customers, whereas they themselves were exploiting those features or using those features. That action actually opened up a market opportunity for you, basically, to come in and provide.
And others.
Right. So every time that's good to hear, right? It sounds like free market competition is working in that way.
Yeah, I think the system seems to be quite balanced. And maybe to add to this, part of the white paper, what it says is that you're a rational, you're economically rational, incentivized player. So you have your skin in the game in terms of Bitcoin investment. So that means you're not incentivized to eventually kill Bitcoin because you will lose your investment.
Right.
So I'm assuming not too many parties are actively searching how to break or kill Bitcoin because they would kill their ultimate investment.
Yes. Yeah, this is...
Or their source of living.
Right. This is something we often say on the show. It's like the crazy thing about Bitcoin is that it rewards everyone to contribute to its success or proliferation.
Yes.
And so you're not really trusting. That's when we say Bitcoin's a trustless system. What you're really saying is permissionless. You're trusting individual self-interest, right? You're trusting your competitors and customers, et cetera, to operate in their own self-interest. And that somehow beautifully inside of Bitcoin is aligned to protect the integrity of the system as a whole. And that really seems like just the key. That's like the key element to the whole thing.
That's how I see it as well.
Yeah.
Sort of the same thing. A lot of people complaining about the BRC20, if you want to open this or not. But I personally am not a fan of that feature. But considering...
Can we just say what those are for people that don't know what BRC20 is?
Oh, so in a short summary, people who have noticed NFTs, it's sort of the equivalent of this, but built on top of Bitcoin, using ordinals in the background.
Which is sort of created a very contentious debate in Bitcoin because it's like shit coining on Bitcoin, and it's a weird gray area now. But continue, please. I just wanted to.
So there are a lot of loud voices out there saying like, "Oh, this is not a moral use of Bitcoin."
Yes,
but I don't even dare to judge it if it's moral or immoral, because if somebody finds it profitable to use it this way, we can be complaining about it, but we are then incentivized to either, let's say, promote a change in Bitcoin protocol that will prevent such feature. And that means you have to have a consensus of the miners, of the users, not an easy thing to do, or we have to live with it and eventually think that if that thing is going to show or demonstrate that it's going to be useful in the future, then it's a legitimate use case.
Yeah.
So, I mean, I personally am not a fan of it, so I'm not trying to promote it or anything. I'm just saying it's a legitimate use in terms of what the protocol allows. And because Bitcoin is permissionless, it doesn't have any CEO who would make the decision saying, oh, we're going to ban this. There's no way you can prevent it because the software is the law.
Yeah.
There's no other rules out there.
Right.
There are no moral rules. There are incentives, economical incentives.
Yeah.
And if somebody starts acting irrationally, saying, "Oh, I want to kill this," then yes, they can. But is it like economically convenient for them? I don't know. Maybe.
Right. Yeah. And we were just saying, like, as you were talking about yesterday, and inspired a tweet that I put out, was there's no illegitimate use of a permissionless system, because who arbitrates legitimacy? And there's been it's inspired a lot of debate on Twitter, just that tweet. And I think that the crux of the argument seems to be rooted in that word, legitimacy. Is it a matter of, is this morally righteous thing to do, or is this like a legally allowable thing to do? One of the turns that the argument took was like lying, for instance, right? Lying, typically considered an immoral thing to do in most circumstances, unless you're, lying to a criminal or lying to someone that might have intentions to hurt you, right? You might justifiably lie to them to prevent that harm being done to you, something like that. But in the legal system, lying is perfectly legal. Like, you can lie your ass off as long as you're not under oath or under very specific circumstances. So it seems like this argument about legitimacy it's ambiguous. Like, are we talking about moral legitimacy, or are we talking about legal legitimacy? And that seems to be around which this argument is turning.
And there's no legal framing. I mean, the only framing is the protocol and the code. So
right,
really,
because Bitcoin is extra legal,
and if it allows it, then it's legitimate.
Yes,
but there is no Supreme Court making the decision if this was a legitimate use, right?
Right. So legitimate in that sense, code is law, and if you are operating within the boundaries of the code, then you are by definition using it in a legitimate way.
Right, and the Bitcoin node is going to make the arbitration like this. It's going to say, this is crap. I don't understand this transaction. Just leave it.
Yeah. So then the mechanism to help people not get scammed in Bitcoin-based NFTs or BRC20 tokens is what? It's Bitcoiners saying this is an immoral, or maybe even saying illegitimate, even if they don't mean legally illegitimate, they might just mean morally illegitimate. It's like a campaign. You're campaigning for people's mind share to help them realize that this is maybe not something that's in their best interest to buy, let's say.
I mean, one thing is speaking publicly about it. I think that's totally fine. Why not? I mean, we have freedom of speech, right? So educating people about something that I personally consider not as a very good feature is fine. And if I am, again, incentivized enough to be loud enough about it, that probably means that the audience is going to be large enough and it's going to have big impact. That means it could reduce the use of that feature.
Yeah.
So sure.
Right.
I mean, these things are legitimate. I'm just saying that it's not possible to forcefully get rid of this, except for changing the software, which can be done, but there have to be some effort put out for this.
Right.
The question if it's worth it for some individuals. So yeah.
And back to game theory, there might also be a silver lining here, like in some positive externalities arising from this ordinals inscriptions situation, where this represents additional demand for block space, right? So fees are being driven higher as a result of this. Doesn't that push more development into layer 2, right? Creates more demand for things like the Lightning Network, et cetera. So that would presumably push more capital investment and development mindshare into layer 2, which would ultimately make the combined network even more useful.
I think the whole picture is even much more complex. Sure, I mean, any inconvenience, human beings are lazy, right? It's all about automation. So whatever makes your life easier is exactly where you're willing to spend your time and effort. But you want to do it once. So improving layer 2 for sure. From other perspective, there have been some higher transaction fees lately, which means this boosts the revenues of the miners, which means technically more miners are incentivized to enter the game. What that means, we have ultimately better security of the blockchain, which we care about. And that's something that's sort of still kind of being forgotten or somewhere in the background, that the main reason why Bitcoin still probably hasn't failed is that we have a huge amount of computing power securing the blockchain, which is unprecedented unprecedented for in other blockchains.
Right. And
so for me personally, the word blockchain has only meaning in the context of BTC, which is an unpopular opinion.
Sure.
But
no, we share that opinion. We usually use the term time chain, actually, just to distinguish between all the other blockchain buzzwords that have been commandeered by various projects. That's a great point, though, that it's also creating more incentives for more mining hash power to come online, which is to create a more secure monetary network, which is to create more demand for Bitcoin. It's contributing to that virtuous cycle that culminates in number go up.
Same thing with the exchange rate. Can we be sure that actually the current exchange rate is kind of like backed up by the higher interest in Bitcoin because of these ERC-20s, ordinals, and stuff like that?
Right.
I don't know. Maybe. It's hard to say. So you cannot just simply cut off that lag if it was possible. Because it could have this butterfly effect on breaking something else on the other side of the world.
Yeah, it's interesting because it sort of frames Bitcoin as a very fundamental tool. Like I like the analogy of the hammer, right? Like a hammer can be used to do something constructive, like build a house, or you can do something destructive, like bash someone's skull in. That doesn't make a hammer moral or immoral, right? It's amoral. It's agnostic of human morality. The morality is imputed into the tool.
And who uses it?
Yes, by the wielder. And so we're saying the same thing with Bitcoin. It's like Bitcoin doesn't give a shit, like moral, immoral. You could use it for presumably immoral purposes, right? If you're selling a BRC-20 token or whatever scam you're creating on it. But that doesn't mean Bitcoin is immoral in any way. It's just, again, it's agnostic to the whole thing. So I don't know. It seems difficult to kind of get that in our mind. We're always everyone's looking at Bitcoin as if however they're using it is what Bitcoin is to them. And then if someone's using it differently, then they might pass a judgment on others the way they're using it. But I don't know that makes. I mean, I guess it still makes sense. Like you could judge someone for using a hammer to kill someone, but you're probably not going to petition for criminalizing hammers.
No.
Right? That wouldn't make any sense.
Then you would have to ban all the knives and things.
And then we'd have no houses. Yeah, exactly. So
a lot of dangerous objects around us that can kill people.
Yes.
Including cars. Yeah. I think maybe, I think Max Kaiser says, like, you don't change Bitcoin, but Bitcoin changes you. Mm-hmm. Right? So that kind of reflects what we just summarized, that if there is something, let's say, negative is happening in the market like this, we have full blocks, then we're making more money on the mining side, makes us eligible for improving the infrastructure because we have the capital, let's say. By we, I mean the miners.
Yes.
And on this side, you can promote the development on layer 2, whatever. So like even negative things are actually things that have positive impacts.
Yes. Right. It's kind of like the yin and yang thing, right? And every good act, there's a seed of evil, and every evil act is a seed of good.
Right.
Another silver lining, perhaps, that came from this was the entire debate about, was the block subsidy, were we going to need to fork Bitcoin and create some permanent inflation because transaction fees wouldn't be sufficient to secure the network?
Oh, we have just seen it. It was a good demonstration, right?
Right. Well, that debate is just gone now, right? Like because transaction fees have become so high recently that it seems much more obvious that transaction fees will be sufficient to secure the network in the long run for Bitcoin. Whereas prior to all of this ordinals and inscriptions debacle, there's a big cohort of people arguing that no, you needed to create some permanent block subsidy to keep the network secure. It's not something that I think many Bitcoiners seriously bought into, because once you open that Pandora's box, it's like, well, what's the right inflation rate? Is it 0.1%? Is it 1%? Is it 10%? It just, once you compromise the supply fixity of Bitcoin, I think it's a real problem. But there was a serious debate going on about that prior to this, but now that debate seems to have gone away.
Yeah, and I think this is never going to go through, but never say never, right?
Yeah. Okay. Let's talk about one other thing you brought up. So the reasoning behind Stratum V2, why this upgrade was needed. first of all, what is that? What is Stratum V2? How does it relate to everything we've been talking about, and why was the upgrade needed?
So let's go back to Stratum V1, which was not known as Stratum V1, but we need to add this attribute. So the Stratum mining protocol. So it's a protocol used between the mining machine and the pool, and it's used to distribute the mining jobs to the machines and to submit the results, to oversimplify it. And to do a little bit of configuration if you're running ASICBoost, which is nowadays the standard.
So this is a reporting mechanism?
It's a communication protocol between the machines. You can think of it as let's say an API between the pool and the machine.
Okay.
And the machine is asking, so the machine subscribes to the pool, asks for the job, and the pool regularly sends a new job. Whenever the machine finds a result for the mining job, it doesn't have to be block, but it can be anything that fulfills the difficulty of the job assigned to you by the pool. It submits the result. The problem of the protocol is that it's completely plain text, unencrypted. So you can, if you tap into the network where the miner is operating into a router, and if you dump the communication, you can just really see what's happening there. And because the protocol is quite simple, you can easily divert part of the hash rate to your endpoint as a hash rate stealer, let's say. So these were like real cases happening when smaller operations were using, let's say, some random like TP-Link routers, and these typically have some security problems if you don't keep the firmware up to date. And there were viruses actually getting into these routers, because they're typically available on the internet. Like there's just bots scanning the internet and trying to find these routers with their security holes. And it was so simple to detect the hash rate so why wouldn't the virus steal a little bit of the hash rate, not like 100%? So that was one aspect, like completely insecure. Second, because it was a text-based protocol, or to be more specific, it was JSON. It was a bit inefficient. There was a lot of text in the messages that wouldn't have to be there, and that's a lot of bytes being wasted, like terabytes of data going back and forth that wouldn't have to be there if the protocol was using some simple, more standardized approach, let's say binary. And third aspect was that the protocol itself had some performance issues that could be reflected by coming up with a new protocol. So these one aspect being, for example, the distribution of the block template when a new block is found in the network. What happens is the moment the pool sees a new block in the network, not necessarily found by the pool, it has to distribute an empty block template, because it takes seconds to generate the full template with transactions. But the machines, you can think of them as racing cars. They're like running full speed. You cannot stop the machine to stop hashing. That takes seconds to ramp down and seconds to ramp up. It's not very good for the hardware also to do the full power cycle, because it's like a heat cycle, stressing out the PCBs. So the machines have to hash all the time once you start them up. So what happens when the pool sees a new block, it sends an empty block template. And this is an aspect that could be optimized if you, let's say, have like 2 block template candidates, and once a new block is found, you send the alternate block template if it's still valid. So that's something that we addressed in the new protocol. The security aspect has been also addressed. We're using Noise, which is Noise protocol framework. So the security protocol has been developed using the Noise framework, which is, for example, used in Signal or in WhatsApp. The analogy is like you're accessing your bank through HTTPS. So you have a root certificate of the pool, and the server that you're connecting to provides the certificate, and you just verify that it's signed by the pool. The pool certificate can be downloaded from the website. It's like a small string that you just add to the URL when you set up the miner. So the security aspect has been addressed. Then we looked at the efficiency in terms of data bandwidth. So the obvious approach was to switch it to binary protocol. That's what we did. And then The third thing I already explained with the block templates. And actually there's a fourth feature that is kind of like unmatched in the old protocol. And that is there is a dedicated sub-protocol meant for miners to actually negotiate their own block template. So you can think of it as if it's not the pool generating the full block template and then sending you the job based on this block template, because it's 1 megabyte, it's pretty big, right? So you don't want this to be shipped to the miners. But in addition to this, you were able with the new protocol to run your own Bitcoin node. That's currently being developed by the open source initiative behind Stratum V2. We're just part of the committee, but we're not like actively pushing our changes in the protocol. And this protocol allows the miners to select their own set of transactions and only send it to the pool for approval. But in the meantime, they can already mine on top of that. This feature may sound a little bit like over-engineered, but it's there for us to be ready just in case like regulations step in, where, for example, the pool operators would not be able, like legally able, to provide you like full block templates with the transaction that they select because of various OFACs and whatever restrictions may come in the future. So this is like I don't want to say this is the killing feature, but this is one of the features that caught quite a bit of attention when we came up with the idea.
So in the context of our discussion today, like game theory, what were the impacts of this upgrade? Like, why was it needed? How did it change the game for miners and or hardware providers?
We were actually quite pragmatic about this. When we were developing the commercial version of Braiins OS, the business model works like this. You install the firmware, and then when you run it on your machine, part of the hash rate, we call it the dev fee, goes to us. And we needed a secure channel for this. And we were like, let's not keep this for ourselves, but let's like bring something back to the world. And we decided, okay, let's look at the mining protocol. Let's design a new one and use it for our own business use case, but give it to the community, because then the mining machine, except for the dev fee hash rate that goes to our accounts, has the legitimate hash rate or the user hash rate, which is the rest after subtracting the dev fee, going to their end pool or whatever the endpoint is. And that can be also used for this. So we were like, okay, if we're designing this, it doesn't make sense to keep it for ourselves. So we were like, let's upgrade and provide it to the community. So now the situation is that there is an open source initiative that took over the development. So basically now the sources are, we provided the original reference implementation back in 2019. But now they have a new independent implementation in Rust programming language. And it looks like there's already one pool supporting, and there's going to be more players. What is still a little bit of an obstacle is that the manufacturers are a little bit hesitant in implementing it in their stock firmware, which is actually an advantage to us because we provide it natively in our firmware. But I kind of do understand the reasons because the CG miner code base is very complicated to adapt a new protocol like this. But there is an alternative for the existing machines that are not running alternative firmwares, and that is they can run an aggregating proxy on site. That means that the machines locally are connecting to this proxy. That proxy aggregates all the hash rate, and then it can use the Stratum V2 secure connection upstream.
Interesting. Okay, well, this has been
that was a little bit longer contribution to the topic, but
no, I appreciate it. Yeah, a bit technical, but comprehensive. This has been great. I think it's very important for people to think about Bitcoin mining. Like Bitcoin doesn't. That's where the rubber meets the road, right? It is the business of Bitcoin, basically. So I think this is a really good discussion and hopefully useful and valuable for people. I've kept you long enough, and we've got a conference to get to, so I appreciate you doing this. Could you please let my audience know where they could find you on the internet?
They can find me on Twitter on Jan Braiins. They can find me on Telegram, Jan Braiins as well. And they can send me an email at jan@braiins.com.
Awesome. Jan, thank you for doing this.
Thank you for having me.